Hey guys, it's Serge here. I just got off a conference call with a couple investors, and we talked about Disney. Disney, of course, today is the big story. The stock is selling off right now about 5% here at about 11 a.m. Eastern on May the 11th. And the financial media is having a field day out there. Basically, the company missed both top and bottom line estimates, and the stock is falling. Now, I'm not entirely sure why that's such a huge surprise or why people are making that big deal of it. We are very late in a cyclical expansion. In fact, I think we have already seen very, reasonable, uh, very reasonable evidence that we have been slowing down both in economic data terms as well as in corporate profits. So I'm not sure why that's a big surprise. But if we look at the chart here, I want to just give you guys a little bit of perspective of what we are looking at here at the desk. And first of all, let's just zoom out in the chart here, make it multi-year, and again, that's where we gain our perspective from, right? So first of all, let's keep in mind that very simply, this stock has already been selling off for quite some time. We had a double top here with the July 2015 top and then the November 2015 top. So, plenty of tops to sort of sink your teeth into. And then we basically had this trend break, right? And you can see that basically right now, as the stock is rejecting here, we're rejecting the stock at a key confluence resistance area. Okay, and I don't think a lot of people look at this kind of stuff, which is why they're so surprised when this stuff happens. Let's just have a look at this, and I want to just give you guys a little bit of perspective. So again, we have a confluence resistance area where the stock is coming to. So for one, the confluence resistance is, as you can see, we just retested what used to be a support line, right? We kept bouncing off that blue line. It's now become support. Let me get rid of that line to kind of clean up the chart, make it a little bit more clear for you. Then we have the 50-week moving average. That's this yellow line, and you can see that line had been holding as support fairly cleanly. Then it got a little choppy here last summer as volatility picked up, but we're now coming back into that area. Lastly, we have a 61.8% Fibonacci retracement from those highs up here in last December, down to the lows of February. So we retraced just about 61.8%, which from a Fibonacci perspective is quite important. So we have a confluence resistance area here. Now, this doesn't mean you have to go outright and sell all your stock or get short the stock. Give it a little bit of time. This needs probably 1, 2, 3 days to kind of see how the stock reacts. But if we continue to feel heavy later on today, tomorrow, maybe even by Friday, then I do think the stock here sets up for a trade to the downside, maybe even to revisit those high 80s here through the next maybe through the summer at some point. So that's kind of what I'm looking at here, keeping it very simple, gain perspective, see what the street's talking about in terms of what's the chatter. The chatter was very bullish, by the way, on Disney coming into yesterday. So really not a great surprise to see that type of reaction either. So anyway, guys, that's what I'm looking at. Please give us a like on the video. That would move me up in YouTube ranks. Got a lot of exciting stuff coming in my channel. We're starting a vlog. I'm starting a vlog, so you're going to be able to follow me along throughout my day, kind of see what's happening when I get my phone calls, what I do, where I trade from, what I do. So that's all going to happen here in the next couple of months as summer kicks off. You guys take care, and I'll see you in the next video.